What's going on, guys? In this video, I'm going to give you the crash course on dividends. This video is going to cover everything you might want to know about dividends. Now, I am sure most of us are familiar with the concept of dividends. Essentially, it is when a business makes money, and with that money, they could either do one of two things: pay their investors or reinvest it back into the business. When they pay their investors, that is known as a dividend. So again, I'm sure you all knew about that already, but this is going to be the stuff that we're really going to focus on. And then I'm going to show you why dividends are so important and arguably the greatest money-making tool in the stock market. So make sure you stick to the end. But let's dive in. First to go over is the dividend yield. We're going to be using the example Pepsi or PepsiCo. And we're going to be using Seeking Alpha a lot, but the dividend yield, which you could find right down here, is 2.7%. If you want to pause the video, you can read this, but essentially it's just saying how much they are going to pay you compared to the price of the stock. And if we whip out a calculator really quick, we could actually check the math. So we got 170.40 times 0.027 or 2%, and that is saying 4.60 or $4.60, and that's going to lead us into our very next one, our dividend rate, which you can find right here. Dividend rate says $4.60, but there's so much more that we need to cover in dividends that the summary on Seeking Alpha does not cover. So we need to move on to the dividend tab, and if we scroll down, here's a lot more information. So you can see right here, our annual payout or the dividend rate, same difference, is $4.60. So we got our dividend yield and we got our dividend payout out of the way. Next is going to be payout ratio. So for Pepsi, it's 67% or just under 68%. But what does that mean? And here's where you can find it right here. So essentially the payout ratio, if we actually jump over to our financials, and if you scroll down and see how much Pepsi is making each year, so its net income, you can see looks like a little under $10 billion. Let's just pretend it's $10 billion to make matters easy. Let's jump back over to the dividend tab. So if Pepsi is making $10 billion a year, then it is paying out 67.93% of that to its investors, or $670 million is going to its investors, and then that extra 30 some odd million is being reinvested back into the company or paying off debt, whatever it might be. So that's your payout ratio. And to me, payout ratio is very important. I want to make sure it's below 70% or even below 50%, because if it's, say, 120%, where's that extra 20% coming from? If a company's only making $10 billion, but it's paying out $12 billion, that doesn't add up. There's $2 billion extra dollars that they don't have that they're going to pay their investors. Not a good business model. So a yield, people are going to look between maybe 3 and 5%. And then for a payout, they're going to look for something under 70%. There's plenty of companies out there that may pay 80%, which is fine, but just something to keep an eye out for. So that's our ratio. Next, we're going to be jumping over to growth rate. So Pepsi has a pretty nice growth rate of 7.39%. Now, this isn't the stock's growth rate. This is our annual payouts growth rate. So each year, Pepsi has been growing, or its dividend has been growing at 7.39%. So that means, we can do the math really quick, $4.60 times 1.739, well, 1.0739, let's X out of that. Next year, we could be looking at around $4.94 because they're growing at this 7.39% rate. So growth rate is another great thing to look at. I want something that's pretty steady, maybe between 5 and 10%, but do your own research on that. And you can see right here, this is actually their 5-year growth rate. So it's taking the average of the past 5 years and figuring out what its growth rate was. We could even go over to here, dividend growth. And if you scroll down, let's go out 10 years. here's its dividend growth each year. So you can see last year was only $4.25. The year before that was only $4, $3.79, $3.59. So it took the last 5 years, averaged it together, and this is growing at 7.39%. But let's jump back over to the scorecard and bang out everything else here. Dividend frequency is a pretty easy one. It's just how often you're going to get paid. So Pepsi is quarterly, and I'd say 95% of stocks are going to be quarterly. There are some that pay monthly, and I'm sure there's some out there that only pay annually. But if you actually jump over to TradingView, you could see on the chart, see these little Ds? This represents your dividends each year. This D isn't necessarily when you get paid, but we'll go over that in a second. But you could see that Pepsi is every single quarter you are getting a dividend payment. Now, amount, not to be confused with annual payout, the amount is what you're getting each quarter, or each time you're getting a dividend payment, how much will you be getting? And for this, you're going to be getting $1.15 every quarter, which will eventually equal that $4.60 after your 4 quarters or the entire year. So another easy one, and you can find that right here, the amount, $1.15. Now we start to get into the more complex stuff, but not really. So I'm going to break it down. What is a declare date? This is just when the company is declaring the dividend, saying, hey, we're going to pay our investors a dividend this quarter. Here's how much it's going to be, all that good stuff. Then right after that, we have the ex-dividend date. This is going to be one of the most important dates to look at. And you can see for Pepsi, it is 6/2 or June 2nd. And you can find that right here, its ex-dividend date. And here was its declare date, 5/3. But the ex-dividend date represents the very last day that you have to own this stock. You need to own Pepsi on the ex-dividend date. So buy it right before the ex-dividend date if you want the next payment. We'll even put a line down. So that is going to be June 2nd is our ex-dividend date. So if you don't own Pepsi after this day, you are not getting the next dividend payout. And that will lead us into our next one, the record date. This is essentially the company follows the very next day. Sometimes maybe it'll be in 2 days after the ex-dividend date. But this is the company just checking all of its records saying, okay, who has this stock and who needs to be paid? So it figures that out. And then they have all that list. So that's the record date. That's more for the company side. Nothing you really need to worry about. You need to worry more about the ex-dividend date to make sure that you own the stock at the end of that day. And what's neat about the record date is you could sell the stock after the ex-dividend date. Let's say you buy the stock on June 1st. Well, let's jump over to TradingView. So let's say you buy the stock right here. So right before May 27th. We'll make that blue. And then let's say you sell the stock a little after, we'll say on June 8th, the red represents when you sell. And this will lead us into the next column, which is the payout date, June 30th. So let's then put another line down, June 30th. So this is when you are getting paid. This green line right here. But you sold it before the payout date, you will still get the dividend payment because it was already recorded that you owned it before the ex-dividend date or on the ex-dividend date. So you could sell it anytime in between this range and you are still getting that dividend payout. Obviously, you could hold on to it indefinitely and you'll continue to get the dividend payouts, but that's a cool thing that not that many people know. You could sell a stock and then still get paid that dividend as long as you bought the stock on or before the ex-dividend date. So that's pretty much everything you need to know with dividends. But now let's get into the good stuff and why they are so important. So I'm going to jump over to an S&P 500 dividend reinvested price calculator, and we're going to look at the past 100 years. So right now we are in May. So let me just jump over to May and then May. And we are in 2022 right now. So let's get that. And then for this, we're going to select 1922. So the past 100 years, we hit calculate. The S&P 500 has had an annualized return of 6.376%. And if you were to take your dividends and reinvest it, we are looking at 10.46% or 10.465. And then if you do the math, I mean, it's right here. We're looking at 48,000 compared to 2.1 million. But if you do the math, 100 years, let's say our starting amount is $100 over 100 years. Here's our rate of return. We would turn that $100 into $48,000. And this is if we're not reinvesting our dividends. That's still a great return over the past 100 years. But if we did reinvest our dividends, we are looking at, from that same $100, we are not adding a single dollar more than our initial $100. We are ending with $2.1 million. So just by reinvesting our dividends, we are making over 40 times the amount. If you do the math, 40 times more just by reinvesting our dividends over the course of 100 years. So that's why it's so important to reinvest your dividends. Now, you may be buying individual stocks, or if we jump over to, how about the SPY, Standard & Poor's 500, you could see we're also getting a dividend payment every single quarter. If we jump over to even the NASDAQ, we are getting a dividend payment, a much smaller dividend payment, only 43 cents, as opposed to $1.37. And then if we look at the Dow Jones index, you could see that you are actually getting monthly payments right here. And looking at this one varies, 13 cents, 77 cents, 52 cents. So this one's varying, but this is one where you're actually getting 12 dividend payments each year. But you jump into one of these indexes and you are getting that dividend payment, make sure that you are reinvesting those dividends, especially if you're not planning on retiring for another 10, 20, or even 30 years. But if you want to go the more exciting route and try to buy your own dividend stocks and you're wondering, where can I find high quality dividend stocks? You can jump onto several different screeners. Here's a screener that I like to use, FinViz. Here's all the dividend stocks that you could possibly invest in, at least all of the American dividend stocks. You can see there's over 2,300 different stocks giving a dividend over 2%. I mean, there's even more if we just do anything. Yeah, we have almost 4,000 stocks giving some kind of dividend. But if we want to look for something, say over 2%, you got over 2,000 stocks to look through. And I just sorted this by market cap. So here's your 20 biggest stocks in America: Johnson & Johnson, Taiwan Semiconductor, Procter & Gamble, ExxonMobil, JP Morgan. I'm sure you've heard of all of these companies. Verizon's a great one to invest in. Not financial advice. There's Pepsi right there that we've been looking at. But that's everything you need to know about dividend stocks. Guys, if you like this video and it helped you out, make sure to smash that like button. Check out my other videos. And as always, I will see you in the next one.